Hey Brew Crew, Brewer here. I wanted to quickly go over the positions that I put on today. First up is DraftKings. So I put on the DraftKings position that I discussed yesterday, except instead of selling the 30 put, I was able to sell the 29 put near the open for the entire spread to be free, meaning it cost $0 to put on. But shortly after the open, some news hit the wire about, cancellations of upcoming games. So DraftKings had a huge spike lower. At the time, I was waiting to see if the 20 MA would hold because we really just blew past that in the span of like a minute. But it quickly recovered from that knee-jerk spike lower and afterwards just kind of hung out around $34. And because of the slight increase in volatility, the 29 put actually started trading for higher. So I went ahead and added another one of these spreads and was able to collect a 15-cent credit for the second one that I put on. Now, can DraftKings tank from here by expiry? Absolutely, it can. But the 29 puts are still about 5 points away, and based off of how the stock recovered from today's spike low, I'm actually willing to wait until that low is taken out before closing out the 29 puts. So that's my plan. I got 2 spreads on that, probably gonna be a scratch, but who knows, let's see. At least I got a few coffees out of it. Next is Nvidia. I entered 2 broken wing butterflies on the call side for Nvidia at the 430, 435, 445 strikes for an average of 3-cent credit. I'm looking to see Nvidia slowly creep up to test the all-time highs by Friday. And like I mentioned in the weekend video, I like its relative strength. I think this descending trend line will provide some resistance for this stock before it moves higher. And while the stock dribbles around resistance, I'm looking for premium to drain out of the 435 calls. If Nvidia breaks through this resistance and continues to take its time drifting higher to the all-time high near Friday, this spread should expand nicely. And the last play I did today was on Tesla. I got a 1770, 1800, 1850 call broken wing butterfly for a 19-cent credit. This one, if Tesla reaches the all-time highs towards Friday, then that should expand the spread nicely. But it better not run up too early, too hard, or too fast, because this butterfly just isn't wide enough to properly capture profits if that happens. In fact, the spread can easily turn red if that happens. And if Tesla doesn't get up there by Friday, no harm, no foul, because remember, I collected a credit for this play, meaning I got paid to put this on. Okay, so that's all for the new positions I put on today. For existing positions, SLV silver is looking good. It's probably not coming back down to 20, so I just keep the credit collected on this. However, who knows, silver could just tank and the 20 puts would expand quite nicely. Hopefully not tank so hard that the 19.5 puts expand too. And that's pretty much it. One last thing I wanted to share is I think it's worth noting just how sideways the market has been over the past couple of weeks, which is very different from what it has been the previous few months where we had really strong trending days and a lot of stocks were trending. In these choppy market conditions, the reason you see me putting on these cost-free directional trades is that the sideways chop in the broad market indexes really puts a drag on any sort of directional plays. So I really wanted to try to keep the debit on these plays as low as possible, because the last thing I want to do is give back all the gains I made from the sharp rally off of the March lows, because we're simply in a different market condition, which requires a different approach. The important thing to realize is that trading isn't about making money on your plays, but also preventing money from leaving your account, because the end goal of trading is to grow the portfolio. Most people are probably out there blindly buying calls or puts and paying a lot of premium for them and taking on quite a lot of directional and time risk without knowing how to reduce that debit. And it's costing them a lot and draining their accounts when the trades don't work out, okay? So really important to recognize different market conditions and adopting different strategies and approach the markets differently in these new conditions, which is what I'm trying to do right now with these more conservative, cost-free directional trades, because that's what the market is telling me. Now, of course, that can change, and once it does, I will move to more aggressive directional plays. But until that happens, like I mentioned, status quo, all right? Anyway, that's it for today. Let me know what you think in the comments below. And again, I talk about these trades and share them out on Twitter, so if you're interested, go ahead and check out those links in the description below. Until then, stay safe, Brew Crew, and I'll see you in the next video. Cheers.